Our next guest, not too worried about either company, Walmart and Home Depot's weaker than expected outlooks. Joining us now, D.A.Davidson, Michael Baker. He has a $195 price target and buy rating on Walmart, and $344 price target and neutral rating on Home Depot. So maybe we can just start out kind of high level and get a sense from you. The guidance itself was kind of muted for both companies, but there are certain interesting factors in Q1, like the leap day, or the fact that it's a leap year, so we have an extra day and inflation moderating here. What would you kind of say from these two snapshots kind of exemplifies the state of the consumer right now? Are they as resilient as we were hoping they would be?
Yeah, I think both companies are facing headwinds, but it feels like the headwinds are less today than they were a year ago. A year ago, we were all thinking we were going into a recession in 2023. That hasn't happened, and maybe it's going to happen in the future, but it just seems less likely now than it did a year ago. So the outlooks are improved in that sense. I remember Walmart's outlook for the full year is actually better, or at least in line with consensus. They had a little bit of a lower first quarter outlook, which that's what we're not that worried about. They've been sort of guiding to a lower next quarter and then beating it all year. But in general, it does seem like the consumer is holding up well. One important aspect in both of them, but maybe more important from Walmart, is the concerns that they had about pricing last quarter. Remember on their third quarter call, they had the big D word. They talked about deflation and that as a potential. They backed off on that a little bit this quarter, saying that the price declines that they're seeing, they are still seeing declines, but not as much as would have been suggested last quarter. And so I think they've sort of taken that deflation risk down quite a bit, and that's a positive.
Which maybe as an indicator for the overall economy could be a negative, as we're looking at, just different areas that pricing has been hotter potentially than expected. But I want to ask you, because Walmart's not historically a very acquisitive company, yet they did announce that deal, multi-billion-dollar deal to acquire Vizio, vertical integration. Where do you think, what do you make of the deal, first of all, and what do you think Walmart is seeing as it, looks to expand its ambitions and access to customer data and advertising in other areas?
Yeah, it's a pretty small tuck-in acquisition in terms of the financial impacts, but as it relates to the strategy, it is really important. One of the things that we've seen from Walmart and in their long-term plan is their ability to grow profits greater than sales, and that comes really from two main aspects. One is growing their alternative businesses, which are higher margins, and advertising is one of those, and this is a play there. And then secondly, you talked about it in the lead-in, is the automation that they're seeing in the distribution centers. So just more of the same in the sense of growing those two line items. And again, that helps grow their profits greater than sales. And we saw that both in the year that just finished, as well as in the guidance for next year. And we think that's a really key long-term aspect to our bullish call on Walmart, is their ability to grow their operating margin.
Finally, Michael, unpack for us the different inflation impacts across Home Depot and Walmart. Traditionally, Walmart has benefited as people kind of seek inferior goods or seek good deals. And then Home Depot, it seems, was benefiting from higher pricing, but that's rolling off.
Right. Great point. One of the things we're seeing from Walmart, and we think was really important in this quarter, is unit growth getting better, particularly from higher income customers. So they are taking market share. And so we think that is one of the reasons why the stock is up today. And again, their same-store sales better than a lot of the industry data that we're seeing. Probably a little bit more pressure to Home Depot. You're right. They don't have as much of that unit impact. And so therefore, their comps were negative in the quarter and expected to continue to be negative. But it's Walmart's ability to grow units and take market share that's enabling them to grow their comps better than expected in this environment.